Which stocks am I buying right now? Which stocks am I watching right now? That is the topic of today's video. Before I start, it's a really wacky market right now. I really look at it as a tale of two markets. There's the market for those premium companies, the types of companies that are in my top 10 list. I will link in the description below to my top 10 favorite dividend stocks of all time. And then there's a market really for everything else. Those premium stocks, those top 10 stocks, they are trading at really lofty multiples. They are trading at really high valuations. They are not on sale. By contrast, when I look at the everything else bucket, a lot of deep discounts are there. Just huge, awesome, amazing buying opportunities. And this is really difficult for me because my strategic focus right now for December and rolling into 2019, it is all about my top 10 stocks. But I'm not seeing a lot of value there right now. And so I'm starting to broaden my scope of how I'm going to approach not only this month, but 2019. And it's really going to be a dual strategy. First and foremost, I'm always going to focus on my top 10 stocks. When a value appears in the top 10, I will seize the opportunity. However, in parallel, I'm going to be keeping a very active focus on my medium and smaller positions and, quite frankly, potential new positions to the portfolio. I'm going to keep an eye for deep value because the deep values right now, they are appearing in stocks that just do not happen to be in my top 10. And so I've got to take advantage of those opportunities when they come. Now, there are two types of investors. There's investors that like to build up a lot of cash and just wait for opportunities. That's one type of investor. That type of investor might say, hey, Ian, you just wait, stockpile your cash, your top 10 will go on sale, just wait until that time. Then there's the other type of investor, which is like myself, that likes to buy monthly. I'm always buying down markets, up markets. I am always deploying cash because I invest for dividends, I invest for cash flow, and the quicker I get my cash to work, the quicker I receive dividends. And so anyways, I need to be buying monthly. That is my philosophy. And so I need to broaden my strategy. It's not going to be just about the top 10. That is going to be my strategy of choice. But I've also got to look at everything else because that's where the value is now. That's where the good, awesome deals are showing up. And so I want to discuss today a bunch of stocks. I actually have 6 on here, but I'm probably going to discuss more. Some of these are stocks I own. Some of these are stocks that I don't own. These are the dividend stocks that are on my watch list right now. These are the ones that I am either buying or contemplating buying right now in December 2018. So let's get started with today's dividend investing video. So welcome to the video, everyone. First one on the list will surprise you because I reviewed this before and I have actually changed my mind on this company, Kraft Heinz. It's likely a response just to the overall valuation of the company, but it's also a response to me getting over the emotions that I had in this one. I used to own Heinz. It got bought out. I didn't like how all of that went down. It left an unsavory taste in my mouth, and I didn't like how things had happened, and I therefore had a bias against this company. I have largely gotten past that at this time. I largely am reevaluating Kraft Heinz at this point, and I like this company because it's on just a deep discount fire sale basis, and I love this company, especially the Heinz component of the company. And so let's look at it really quick. $48.51 price per share, $2.50 dividend. Here's the beauty. It has a 5.15% starting dividend yield. It has been a long time since one could get this kind of starting yield on a world-class company like Kraft Heinz. In fact, I can't even remember this kind of situation in recent years. In the past 2-3 years, this is really rare, and the share price just keeps going down. Don't get me wrong, it's going down for a reason. These consumer packaged goods, food goods type companies are facing some pressures, some challenges in 2018. There's a changing consumer. A lot of these companies are struggling to find growth. That being said, analysts actually expect Kraft Heinz to exhibit growth in the coming years. And so this is one that actually should have some growth, but nonetheless, It gets lumped into this category of all these companies that are out of favor right now, and because it's a tale of two markets, it doesn't fit into the cool club, it doesn't fit into the top 10 club. This thing is just on sale. It's going to hit $3.62 EPS this year, at least that's what the analyst estimate for 2018. This puts it at a 69% payout ratio on the dividend, so I think the dividend is safe. I don't think there's a lot of growth for the dividend ahead, but I'm willing to accept that because of the phenomenal starting yield. PE on a forward basis is 13. This is what I'm talking about, deep discount territory. They got some debt, $32 billion. That was one thing I noticed, and so if there was one red flag there, a little bit more debt than I would like for given the size of this company. But that's kind of a theme with everything I look at these days. Now, the thing that really stood out to me with Kraft Heinz that I guess I didn't take note of before, or I didn't place a lot of emphasis on it before, and it kind of reminds me why I liked Heinz so much. Boy, this company has great net margins. Phenomenal, 42%. Best net margins out of anything I'm going to cover today. And the reason it has such good net margins is the fact that they have world-class brands, and the fact, probably if I had to guess, that the ketchup business is quite high margins. And so Kraft Heinz, you're kind of back on my good side. Look, I'm always going to hold a grudge. I'm always going to hold a grudge over what happened back in the day. Wish I just owned Heinz independently, but stuff happens. I cannot hold on to that grudge. I like the company. It's going to make more sense in a minute why I am looking at it so seriously. I don't own it yet, so this is something on my watch list I don't own, but I'm thinking about taking a position either in December or January. We will see, as long as these share prices stay at this level or lower. Now, I want to move on to General Mills next. I own this one in my portfolio. I'm buying this one monthly. Annie's, by the way, this is a General Mills brand. I love Annie's. This is the Annie's snacks, like the cheddar bunnies and the chocolate ones. And I've got the Annie's mac and cheese there as well. We have a lot of Annie's products in this household, and a lot of General Mills products for that matter. Really like General Mills. Stock I bought for the first time in 2018 based on valuation, and it continues to trend down. I continue to add to this one monthly. If you've been following my channel, though, you probably understand usually I don't take a lump sum big investment up front. I like to average in. So this stock right now is only roughly 0.61% of my portfolio. And so it's real small in terms of my portfolio. That's why I keep adding monthly. I'll keep adding monthly until it hits about 0.9% or so. My rule used to be 1%. I don't want to position less than 1%. I'm kind of lowering that these days to 0.9%. Reason I'm doing that is I want to make room for some of my bigger positions, some of my big top 10 stocks. I want them to be really big, and so some of these smaller positions, they don't have to be 1%, but I want them up kind of around 0.9%. So my rules are evolving there. But let's look at General Mills, and I want to talk about this because it makes a lot of sense in context with Kraft Heinz. 38.63 price per share, $1.96 dividend. Here's where it gets cool. Take the dividend, divide by the share price. Starting yield on this company is 5.07%. So real comparable to Kraft Heinz. You get a 5% starting dividend yield here, meaning for every $100 invested in this, I will receive $5 per year in cash flow and dividends that can be used to pay the bills. Phenomenal starting yield. And both of these companies should grow the dividend over time, although over the next few years, especially with General Mills, there's not going to be much dividend growth because they just absorbed a big $8 billion acquisition. I'll get to that in a minute. Anyways, PE right now is 12.6 on a forward basis based on analyst estimates for this year. This year is almost over, so I feel pretty good about that forward estimate. Payout ratio, 64%, so a little bit of a more favorable payout ratio even than Kraft Heinz, but I would say this company probably has a little less growth ahead than Kraft Heinz, but I like the payout ratio. I believe the dividend is safe. I think a lot of investors who are in these stocks right now, they're starting to get concerned. They're thinking, hey, is the dividend safe? I personally believe the dividend on both of these is safe, and I think the share prices are going down. They may continue to go down, and sometimes when that happens as dividend investors, we get a little scared and we start questioning ourselves and we start thinking, oh, are they going to cut the dividend? The metrics that I look at, I believe the dividends on these two companies are safe, but time will tell. Now, the other thing I like, though, about declining share prices, in addition to creating these buying opportunities, is they test the investor. even though I've bought General Mills as high as 47, I bought between 42 and 47 so far. I'm going to buy more this month in the high 30s. It tests me. Look, I'm down a little bit, but it just doesn't faze me because I don't invest for capital appreciation. I invest for dividends, for cash flow, and so it's a test. If I own a stock, by contrast, that goes down and I start feeling really uneasy, that is usually a sign that I did not do my analysis, I don't have the conviction, I may not believe in the company as much as I should. But with General Mills, I have full faith, I'm not concerned. I enjoy these opportunities to buy more and to reach my goal of financial freedom quicker. I can get more cash flow the lower the price goes. I don't plan to sell, and so nothing wrong with a sale with a bargain basement price, PE of 12.6. Net margins on this company are a respectable 13.5%, but this shows a big difference between this one and this one, 42 versus 13.5. Net margins are really important because the higher the margins, it gives a company more flexibility when times get tough, when perhaps marketing budget needs to be higher, perhaps when the cost of raw goods goes up. You have a higher margin, you have a little more flexibility than a company with a lower margin, but both of these companies have good margins. Debt, $15.6 billion. This is, they've taken on some debt to fund the Blue Buffalo acquisition. I'll talk more about that in a minute, but it's got debt. They all have debt, something we have to keep a close eye on. But right now, interest rates are not rising very quickly. I think we'll talk about this in a minute, but banking stocks, they're under a lot of pressure now. I have one of them on my watch list. It's a bank that I own. And the reason they're under pressure is just interest rates are not expected to go up as quickly as I think people forecasted in the past. Banks make more money when rates go up. Anyways, that's putting the banks under pressure, but it also takes the pressure off of companies like this that have debt. So I want to talk about Blue Buffalo. I want you in the comments below, please to add your insights. So, by the way, side note, I have a Patreon now. I will link in the description below to that. Patreon is a platform. People have actually been asking me, Ian, can I contribute to you financially? Can I say thank you with a financial gift, a donation to your efforts that you're doing here on PPC Ian? Obviously, everyone also can gift me other ways, such as likes, comments, subscriptions. All of that means the world to me. But some subscribers ask, Ian, can I give a financial contribution? Well, yes, you can. I am now on Patreon. And if you do make a financial contribution, there's some cool stuff happening on Patreon. Obviously, everything I'm doing will continue to be for free, but there are some premium things there. For example, in the highest tier, I'm sharing all of my stock trades in real time that I'm making in my dividend stocks. Anyways, by the way, I don't have a course on Patreon. I'm not selling a course right now. Again, all of the best efforts that I have, best content, will continue to go as is here on YouTube. But I wanted to bring that up because a lot of people are asking. Anyways, I was sharing some of my thoughts on Patreon, and one of my thoughts was around General Mills. I was sharing with the group there, hey, I'm buying this stock monthly. It's one of the trades that I'm about to make in December, and I actually happened across a concern, and one of the concerns is that I type in Blue Buffalo on Google. One of the first results, or not first results, but first page results that shows up is a kind of Consumer Reports website that takes reviews. Overall star ratings of the Blue Buffalo products were pretty low. People even reported horrible things like their pets getting sick, like the quality going downhill since the General Mills acquisition. And so here's the deal. General Mills paid $8 billion for Blue Buffalo. This acquisition has to work. The qualitative information that I received on this Consumer Reports website on Google, check it out. You'll find it pretty quickly. I don't know if this should carry a lot of weight or not. On the one hand, I just think, hey, Blue Buffalo, maybe they're just not good at marketing and they're not getting their positive reviews out there. Because any business, positive and negative reviews, they've got them all. Maybe only the negative reviews are coming through because they just aren't harnessing the power of the positive reviews. They are brand advocates. They are not making it online. They are not sharing their experience. Maybe it's as simple as that. But maybe there legitimately are some concerns with Blue Buffalo. Certainly no one is going to make an $8 billion acquisition without a lot of due diligence. I'm talking about the bankers. I'm talking about the executives. I'm talking about everyone involved. Every element of this acquisition was analyzed. It just wouldn't happen otherwise. And so I'm sure the people at General Mills are aware of these reviews out there. I'm sure they're aware of some of this customer feedback, and they're probably doing something about it. That being said, it's just one piece of qualitative information. I'm bringing this up because as dividend investors, I often focus on the quantitative stuff, but the qualitative signals, they matter too. And I picked up a qualitative signal. Quite frankly, thank you to this community, because someone put it in the comments. They put a comment like, hey, quality's no good, Ian, look into it. I looked into it. That's what I came up with. Anyways, 0.61% of my portfolio. By the way, I own Campbell's Soup. That's 0.98% of my portfolio. The question here becomes, hey, do I just keep adding to General Mills, bring it up to 1%, maybe 1.5%, or do I keep adding to General Mills, maybe bring it up to 0.9%, and then instead of bringing it from 0.9% up to that next 1.5 or more level, pick up something else, pick up Kraft, Heinz, diversify a little, mitigate risk that way, get back into, quite frankly, I would buy Kraft Heinz, I buy it for Heinz, that's why I want it, but I like the company overall. But that's where my logic is right now. That's why Kraft Heinz is back on the list. The logic tells me, look, I'm not selling General Mills. I'm going to keep buying General Mills. This is more of a decision now. Do I bring it up to 0.9% or do I bring it up to 1.5%? If I'm going to bring it up to 1.5, I don't buy Kraft Heinz. If I'm going to bring it up to 0.9, I buy Kraft Heinz to round it out, to make up for that gap in portfolio representation that I would be missing. I'd be curious how you guys look at this situation, and any pet owners out there, please comment in the description below. They paid a lot of money for this, and Blue Buffalo is supposed to be that healthy, organic, premium pet food. Some of the reviews are saying otherwise, and so that'll be really interesting to see how it plays out. But certainly, this is investing. Nothing is perfect. There's always pros and cons. The data is always murky. It's impossible to get a perfect read on everything. It's impossible to weigh all the factors. I certainly hope they're not cutting quality post-acquisition to squeeze more margins. That would be the worst thing that these people could do. I hope that's not what they're doing. We will see. Time will tell. That said, if there's one red flag, that's an interesting one, Blue Buffalo. Anyways, a lot of thoughts today. Moving on, Apple. Apple is now on my watch list. Seriously, I'm thinking about adding it in either December or January. I need more representation in my portfolio, dividend portfolio at least, to tech. I've got it outside. I've got an angel investing portfolio that I'm not actually actively trying to build at this point, but I've got tech representation there. But I like this company, $169 price per share. It has come down. It has come down recently because of these trade wars. China actually, there's this whole Qualcomm dispute, and China's saying we're not going to allow Apple to import certain iPhones for sale here anymore. But it doesn't affect some of the newer iPhone X models, and so it's just real weird. But net, I think a lot of it is just publicity, PR. It looks like the kind of public trade war type stuff. When you look at the numbers, the amount of business that Apple's going to lose in China only amounts to about 10% of their business in China. Anyways, the dividend 2.92, really low 1.7% starting yield. That being said, the payout ratio is only 22%, so this thing is going to grow. These are kind of high current yield companies, big dividend yield, low growth rate. This one's a low dividend, current yield, high growth rate. I tend to actually like a mix of both, but given where I'm at these days, I'm trying to invest more in growth ones, and so I like Apple. They have a 12.74 forward PE, so really low PE, trading really attractively, and that's based on analyst estimates. Again, this is forward PE, as it is with all of these, and the net margin 22%. So what's interesting with Apple is their net margin's not even as good as Kraft Heinz. Again, this brings me back, wow, great efficiencies at this Kraft Heinz company. Anyways, I used to own Apple. I sold it because I needed the money for another purpose, for one of my angel investments actually. I really want to get back into Apple at some point. I like Apple. It's not a top 10 stock for me. It's not, I don't even know if it's top 20, but it has a place in my portfolio right now or at some point in the near future. So I'm looking at that one right now to add in December. In fact, or January. In fact, I am looking right now, everything mentioned so far, these are all ones where I'm really close to buying. And General Mills is a certainty. I am buying that one monthly. Campbell's Soup I'm not actively adding to now. So I have a few more listed on here. ran out of space. Just want to go through them quickly, and I have a few I did not list that I want to discuss as well. So I discussed the banking sector. Banking sector is under pressure. You guys asked me, do you own any banks? Yes, I do. I own a few. One of the ones I own is Bank of Hawaii, ticker symbol BOH. Nice small regional bank in Hawaii. They grow, actually, in recent years at least, they've been growing the dividend really quickly, really nicely, under a lot of pressure because the interest rates, the bank stocks are just in a sell-off because the interest rates are not going up as quickly as people had expected. Anyways, I'm looking to buy more Bank of Hawaii, most likely December or January. We will see. I could use more exposure to the financial sector. That is the perfect way to get it when the opportunities, the bargains are there. Another one, United Technologies. Finally, a top 10 stock, my number 4 favorite stock of all time. It's not under a lot of pressure, but a little bit of pressure based on the news that they're going to be splitting into 3 businesses. I am actually buying this one monthly right now, so I will be adding to that one into December, January, so on and so forth. I'm buying ahead of the split. I love this one. It's not a great value right now. It's not a deep discount, but out of my top 10, maybe it's an okay value. It's an okay value, so I'm adding to it. But everything else mentioned so far, I kind of look at them as discount sales. This one, not really a discount, but reasonable. Next one, Cedar Fair, ticker symbol FUN. This is a amusement park company, master limited partnership. I've done a lot of videos here on my YouTube channel about this one. I'm looking to pick up some more. I like to, when I buy Cedar Fair, because it's a master limited partnership, because there's a K1, it gets confusing, it gets complex. I don't like to do small buy orders on this one. I like to do bigger ones, buy in chunks. So if I do add more, it's going to be a bigger buy order, and so that's why it's kind of lower on the list, but I love this one right now. It has a plus or minus 7% starting yield, and so would love to add more to that one, but certainly not a core stock. Nothing mentioned so far other than United Technologies is a core stock. IBM is another one, not even listed on here, continues to trade low. I will probably pick up a little bit more in either December or January. Another one I just mentioned, actually my last video, I'll link in the description below. I just did a whole guide, PPC Ian's Guide to Investing in SIN Stocks. I own a company called BTI, deep discount sale. May add a little more. That said, it's kind of big enough in the portfolio where I'm really struggling. Should I add more or not? Just because it's on sale, but it's big enough where I don't want too much more in that industry. I'll probably buy a little bit more. And so that's what's funny about all this stuff too, is even when a stock is on sale, that's not enough for me. It has to kind of be small enough in the portfolio where I want to add to it. Or even if it's big in the portfolio, I want it to be bigger. But BTI is kind of in that unique situation where it's kind of, okay, it's kind of big. It's on the cusp of where I want it to be. I don't want it to be too much more, but I'm adding to it just a little bit at a time because I believe it is such a deep discount. So, interesting market. Very happy that we finally have some sales ahead of us. Upset though that the sales, they're coming on a lot of the stocks that are just not my focus right now, but I will take what I can get. And if I'm buying world-class companies like Kraft, Heinz, General Mills, Apple, look, that's not too bad. Yeah, they're not in my top 10, but there's nothing wrong with that. So I'd be curious how you guys are looking at it. Do you see this kind of tale of two markets happening? Are you having difficulty finding value in your top 10? Or are you finding value in your top 10? And if you're not finding value in your top 10, how are you looking at it? Are you just buying, are you adapting your strategy? Are you buying non-top 10 like me? I'd be curious how you're looking at it all. It's certainly exciting times. Long video today. Hope you enjoyed it. A lot of good stuff going on in the market right now for dividend investors. In terms of full disclosure today, I own many of the stocks discussed today. I am long. I own shares of General Mills, ticker symbol GIS, Campbell Soup, ticker symbol CPB, Bank of Hawaii, ticker symbol BOH, UTX, United Technologies, ticker symbol UTX, Cedar Fair, ticker symbol FUN, BTI, ticker symbol BTI, and IBM, ticker symbol IBM. I own those stocks in my personal stock portfolio. Moreover, I am likely to initiate a position in Kraft Heinz, ticker symbol KHC, within the next 2 months, and Apple Computer, ticker symbol AAPL, within the next 2 months. Do you guys own any of the stocks mentioned today? Would love to hear about it. Hey, if you enjoyed the video, please give me a like, a subscription, a comment, thumbs up. All of that means the world to me. It is the greatest way you can thank me. Also, before I leave today, in terms of a friendly disclaimer, today's video is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult a licensed financial advisor first. Literally just sharing my personal journey here on YouTube and on the internet for fun and entertainment. Hey everyone, thank you so much for being here. We are 18,000 dividend investors strong. I am so blessed, so excited with that. Wishing you a fabulous holiday season, prosperous new year. I will see you all in the next dividend investing video.